my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Service International Limited. And here's your weekly technical analysis of the Chicago soybean complex. I'll start with Chicago soybeans themselves. Beans in the teens and looking good this time. 3 weeks ago, I thought this market was coming to a cusp with an outside week, but no, instead the market idled just over the congestion stroke attractor at 113.92 and the then flatlining short medium moving average currently in 14.04. Then early last week it looked as if the market would break lower again, but this only lasted the Monday, as by Tuesday prices had formed an indecisive spinning top, which was also a bullish harami. This caused the move back up last Wednesday and a follow-on higher for the rest of the week. Now this is interesting. Because the action 2 weeks ago was so limited, it left the market last week with an initial dip and then a small move higher, not outside recent ranges, and that was to actually help form a weekly key reversal up. That's for last week. This past Monday was a follow-on from that realization that a weekly key reversal had been created, though I suspect elements in the market only realized this on Tuesday. Now, I made a podcast and video commentary on weekly key reversals, including soybeans and soybean oil, though not soy meal. And that was done on early Wednesday morning, Chicago time. Well, the move continued higher Wednesday, filling in the old gap 1459 to 1467. That was from May 2014. It also carried on higher yesterday when prices rose again and were halted by the upper bull channel line, currently 1480, of the previously highlighted 2021 mildly bullish channel. This resistance has only lasted a day, as today the market has utilized the ammunition provided by the upper bull channel line to launch a move higher. We now have overhead the 2014 high at 1521, which we're challenging at the moment, and then the neckline currently at 1573, the old 2010-2014 irregular head and shoulders top. There are two things that must now be considered. Firstly, an initial topside target X for the bull channel would be in about the 1596 area. Secondly, let us look at the whole December 2020 to date action. It has elements of a bullish measured move up, in which case we may look up to an initial target X1 in the 1533 area. Now that's elementally doable, and a full target X2 in the 1634 area. Well, 1634, maybe, maybe not. These are levels to keep an eye upon. Chicago soybean meal. I wrote 8 weeks ago of the possibility that we may have a large type of bearish halfway hesitation. I'd also spoken and written about possible targets for this and other patterns thus, and I quote, target X for a bearish halfway hesitation in the 382.5 area, target X1 an initial target for a possible roof half diamond pattern highlighted in red on my daily chart, that's in the 384.5. Finally, there's the lopsided possible diamond top pattern with a potential target X2 in the 379 even area. However, 3 weeks ago, in the run up to Easter, the idea or ideas on the downside failed, caused by the bullish long white Mariposa on Wednesday the 31st of March. Whilst that week was not a key reversal up, the action that Wednesday threatened all 3 targets below. However, there seemed to be a respite from the bearishness just before Easter, with the 1st of April's immediate countering bearish dark cloud cover pattern. As I freely admitted 2 weeks ago, and I quote, the bearish incentive has taken a body blow. The bears have recovered, target X, X1 and X2 are still there, whilst the bulls have a minor victory, as prices are higher than they have been for most of the past 3 weeks. Over all this, the questions on the pattern still remain. Well, it looked like the bearishness had reasserted itself after Easter, but then last week we had weekly key reversals up in both soybeans and soybean oil, but not here in soy meal. However, this market is not immune from the bullish incentives elsewhere, and though we did not make a weekly key reversal here last week, prices still nevertheless rose, such that this past Tuesday the market punched up through the medium moving average, currently 415.90, and today has spent all this time over it. This now seriously questions any downside targets, as we are now testing the recent 50% Fibonacci line at 423.5. I imagine that if we close tonight over that 50% Fibonacci, and then I'll retire all X targets and start looking for potential targets topside. Perhaps we could look to the March to day action as a potential double bottom type action. That's yet to be seen though. Chicago soybean oil. 8 weeks ago, I drew a new acute bullish Andrews pitchfork from the late November 2020 to mid-January 2021 action. 4 Fridays ago, the market broke down through the lower time, currently 52.40. I think I'll now quote the end of my commentary from 5 weeks ago, which covers this situation. I quote, "Please note, the incentive is still bullish. We are still within the bullish Andrews pitchfork, and until this is retired or substituted, that is the way," end of quote. Well, we seem to have found a new substitute or substitutes. The mid-January to end of March action, currently both a bullish Andrews and bullish shift pitchforks. The reason is, I like the shift, but the Andrews is more acute and possibly a better fit. Even if it was breached on the downside last week, this segues nicely into last week's action. Initially a move down, but much like soybeans was a weekly key reversal up. Interestingly, sawmill again was not a weekly key reversal up. Anyway, after a stuttering start at the beginning of this week, prices made a bullish engulfing pattern and a key reversal up just on Tuesday. And we've seen prices race higher to levels not seen since 2011. Indeed, we are currently in amongst some congestion from then, between 57.64 and 58.82, and seem to be emerging out of the top side. Now comes the first real test topside though. The upper time currently at 59.80 of the bullish shift pitchfork. This may well give an idea of the acuteness of the bullish incentive. If it holds, or does not, one may now also look at the action from mid-January to date as a possible measured move higher, with a possible target X, well, in the 67.30 area. It all depends now on the upper time of the bullish shift pitchfork. Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.